Ready for the dictation. Ready, start. The boards of Lipton India Limited and Brock Bond India Limited today formally approved the proposal to merge the two companies. Steps will now be taken to complete the legal and procedural formalities and to obtain the approval of the shareholders of both the companies and the High Court of Calcutta stop. If approved, the merger will come into retrospective effect from July 1st last stop. The boards of the two companies which met at Bangalore separately this morning also approved the exchange ratio of shares of Brock Bond for every 10 shares of Lipton stock. The merger of the two companies will lead to the formation of a single, strong and resourceful foods company to be known as Brock Bond Lipton India Limited. Stop. Both Lipton and Brock Bond are group companies being subsidiaries of Unilever, the well-known international giant with a strong presence in processed foods in over 70 countries. Stop. The merger will facilitate utilization of synergies in key business areas such as finance, R&D, marketing and distribution, besides the availability of trained manpower for future growth and diversification. Stop. The distribution strength of the two companies will assure that under the merged company their products have maximum distributive reach. With its emergence as the biggest foods company in India, the Brock Bond Lipton India is expected to have an equity capital of about rupees 120 crore. Stop. With reserves and surplus of about rupees 160 crore and a turnover in excess of rupees 1500 crore, Brock Bond Lipton India Limited is poised to enhance its profitability potential and value to shareholders in view of its planned thrust into processed foods in a big way. Stop. The plans include development of a range of new products for the domestic as well as international market. Stop. The two companies are well established in packet teas, but their combined share of the tea market in the country will be barely 25%, as loose tea continues to dominate with the share of over 66%. Stop. Since the tea market is perceived to be stagnating, the merged company will be seeking areas of greater value addition to the business. Stop. These include tea bags and instant tea, both of which are capital intensive. Stop.